Hello, welcome to the SmartHelping Financial Modeling live stream. It's Tuesday at 10 a.m. We're doing the cleaning service financial model. Before we get into this, let's talk about a couple things. First of all, making progress on the new cart update. I'm through about 80 or 85 pages, so about 50 more to go. The model we're updating today is in the industry specific bundle right here. Cleaning janitorial service. So we're updating this today. It was really smooth yesterday, so we'll definitely finish this one today. Um, don't forget to subscribe, and also if you want to check out more, look into the financial models tab at the top. You can get all templates here for $9.99. You can also buy in category. There's lots of categories here: joint venture, distribution, waterfall, software as a service, industry specific, accounting tools, real estate, human resources, personal finance, helpful organizational tools, Google Sheets stuff, KPI, valuation. Tons of value there. So yeah, you can get everything on the site for $9.99. These mid-level, intermediate, upper tier bundles are going away once I finish the cart, so you'll only be able to buy everything on the site or in the category bundles or individually after that's done. All right, let me get the Twitter link out here. Test this out here. Sounds good. Okay. So this is a quick one this week. I'm gonna try and do another template. So the single page template I've been doing or taking suggestions on would be something like so this SaaS pricing sensitivity analysis I did was a nice one. The volume discount pricing was another one that was good. I finished it in one page or two. The real estate flipping calculator was another really good one. The value add build. So things like that. If you got suggestions, let me know. I'm looking for just quick tools that are great at explaining complex logic real quick. Alrighty, let's get into it. So yesterday we let off with getting all the import tabs in here. Um, Fixed all the broken stuff. And so today, I don't know what's going on with the Google or the Excel sheet here. We're getting some spillover from tabs as I'm scrolling. Like that's weird. I don't know if you guys could see this. It is odd. Never seen that before. Oh, maybe it was because I had a selection. Okay, so anyway, we're gonna get the financial statements all referenced out and do the sanity check. So there's only really one revenue stream uh, here. It's all the workers, all the billables by them working for clients. So we'll just reference that. So you've got nothing here. I don't know why the Excel is lagging a little bit. Cleaning services. We'll just take the total here. So all the logic's already built. I'm just referencing it in to these formal financial statements. Okay, cost of goods sold. I don't think, so technically, no, labor, I still wouldn't consider that a cost of goods sold. It could be considered under like contribution margin as a variable cost, but we're not granulating the financial statement like that. So yeah, just call this a gross profit. I mean, so let's change this actually. Let's do, instead of cost of goods sold, let's do variable costs, labor, and then total variable costs, and we'll call this contribution margin. update that on the annual. From here should be the same. There we go. So labor, we'll do here. Okay, and then we have, I think I just did general and administrative and then startup costs. Yeah, these are all just G&A, so fixed costs, startup costs. And we could drag this over. Looking good. Then we have Opex Ebitda. Now, Ebitda, earnings before interest, tax, depreciation, amortization, is basically what the business is, what the business is generating in cash flow each month. Then we have interest, which is pulling from the amortization schedule, depreciation. Let's see. Oh, we got to start in January 2022. That's fine. We got to put drop downs into here. We could change this to the start month, and that doesn't matter. I'm gonna keep saving this. I'm worried something's gonna happen because I keep getting spillover from the other tabs, like lagging. Like if I go to a different tab, I'm sometimes seeing images from other tabs, which is unstable. All right, so this looks good. Depreciation. We'll update this on the annual tab. The sum ifs is already working just fine. Okay, interest that. Then we have here, this should match net income minus, so what are we at? 633, 683. This is 633, 683, so that's good. All right, that's the income statement, monthly and annual. Let's go to cash flow statement. This is where more of the work is going to be. So we have customer receipts, which is just top line revenues. We have Opex. This is pulling T25 and 15. Okay, that's great. And these all have to match and line up because the interconnected financial statements are you can think of it as a giant sanity check. It's also formatted in a way where, it's common tongue, I guess you could say, to accountants or in accounting. Um, so that's why I'm adding this to all these templates. And this is number, I don't even know what I'm on, in the 30s, I think. I've been doing this every week since January, updating all these with three statement models and improving any logic where I see fit. So, yeah, it's a big process. I mean, I knew it was going to be hard, but I think it's worth it to do this to all these templates, and then we'll start building new ones once I finish this, for sure. In the meantime, like I said, I'm just trying to do the single template calculators in between these bigger upgrades. All right, so OPEX, interest, taxes, that's all fine. So cash flow from operating activities, then you have cash flow from investing activities. So this would be CapEx, and then sale of the business and each depreciable asset. That looks fine. Oh, wait, no. Okay, so the sale of business, let's look at that. Terminal value is going to drive it based on trailing 12 months of revenue. Now, for this type of business, I think it's more appropriate to use trailing 12 month EBITDA. So we're going to change this to trailing 12-month EBITDA multiplier of trailing 12 months EBITDA. Let's say like 4x. And then let's go here. So EBITDA is in row 28. So if we go to terminal value, we want to sum up row 28. So there's that. Trailing 12 months EBITDA. Oh, I gotta sit up here a second. And 4x of that would be 986,000. You can apply the percentage of that. So this percentage is saying, if you sell it, and we're looking at basically at the income statement, everything as if it was from the operator's perspective. And if you sell, we are assuming taxes there unless you zero these out, then it won't be assumed. What we're saying on the sale, you can say what percentage of these proceeds should be allocated to fixed assets versus applied to extraordinary income. And it's just going to be a tax thing. It won't change the cash flow. Well, change the cash flow only insofar as it changes the taxes. But outside of that, this is the total, which is the total of these two. You've also got the sale of building coming in here, which is manually entered if applicable, if there is a building. If not, you could zero these out. Okay, so this is fine. Yeah, we just adjusted the EBITDA, and I think that's all we really need to do. Oh wait, annualized EBITDA. Okay, so that's great. Terminal value's good. That, this, and this. Okay, now, so sale company stock. So what the model's going to do is it's going to, now this is why we need this monthly detailed cash flow to be accurate, and we're going to redo this. Or update it. Like yesterday, you saw I removed a bunch of stuff that was not needed. So basically, we want to know what's the minimum cash position after accounting for startup costs and then operating activities. And then that minimum is going to be the minimum equity that's needed to get the business off the ground, or to keep the cash position of the business above zero. So we're just solving for that zero. If you want to reserve, you can always go into the startup costs and put some reserve amount here. And then in that case, when the balance sheet did hit zero, technically you would have whatever the amount is in the reserve. But it's just for planning and forecasting. Obviously, the actuals are, who knows, but this is for the purpose of planning feasibilities, worst case scenarios, best case scenarios, just expected base assumptions. All right, so these, we don't need this either. Let's just remove these two. Startup cost is fine. Financing is fine. Before, the model was just assuming the exit was always on the last month, but now we're going to make that dynamic. So that's another upgrade or improvement that is a result of doing this. Okay, so we have other cash flow items. This is just, let's put all these to the left, justified. So other cash flow items. We'll use the same formatting color here. What was that? Man, I'm so jumpy because of this thing was messing up. I don't want to lose the sheet. I don't know what that noise was. Okay, so other cash flow items are, that we don't already have here that we need to account for, would be CapEx. Hopefully my sound didn't go out either. CapEx, exit proceeds, um, taxes. So we did this, this, this. We already have this in here and that. So we're good. Okay. Go to month one. So CapEx, we'll just directly reference it here. Exit proceeds would be this and this. And then taxes is that. And then let's format this as well to be a column with 15. So you can see on the three-statement model how everything has to fit together. It all has to match up in the balance sheet or else, something's wrong. Okay, this looks good. So now after that, we have actual cash flow. So the only non-cash item really would be the depreciation from the CapEx, which we don't need to show in here. All we need to do is show EBITDA minus debt service plus CapEx, since it's coming through as a negative, we'll add that, plus this, and then we can also do under here, cash cumulative cash flow. That, and then this plus here. Also, we got to update the startup cost because there is one in there. So this is now this number. Minus this plus that. Now financing is actually dynamic. If this month equals this month, pull the amount financed, otherwise 0. Okay, now let's drag all this over. And what we're looking for is the minimum cumulative cash flow is going to be our equity requirement. See, this is 155. We've got to do this on the annual tab as well. So this is all fine. This, however, needs to sum if. Sum is 152. 152. Oh, wait. On the first one, it can equal in period 0. It can equal this because there's no time reference there. But then these, if it comes through, will come in there. And then this should always equal 0. If we subtract it from the cumulative cash, it does. Okay, we're out by a ton because we need to sum up all these as well. There we go. Okay, so we got our 0 difference. That's perfect. So we reconciled monthly and annual detail. We can sum up this as 161. We're actually almost done with all the logic. So this 161 is here. And this is the beauty of using a pre-made template that I know how it works because all the formulas and logic are in place. I just had to do the find and replace at the beginning, which you saw how I did that yesterday to make this very easy to integrate. But so we're pretty good here. let's think. Cap table. So this looks like not right. Oh, distributions. That looks okay. So we are looking at cash flow distributable, which would reference the row 160. And then we'll go make sure our balance sheet is balanced. So this is pulling any positive cash flow periods. What am I off here? 160. What's the year count? Years in row 1. Okay. Not 2. And then this we can take off. There's our positive values. Now we want the same thing, but we want to only sum negative monthly periods. And you can see this does a nice waterfall to get the actual available distributed, what's contributed at the beginning, and how the equity is used to cover the negative cash flow burn that's happening. Then we have IRR, internal rate of return, and then we have the investors' internal rate of return if there are any, and owners if there are any. Well, there's obviously going to be owners. There might not be investors though. 14.3, 1035, 6.3% on the project level. Then we got net present values happening here. Cap table. So let's check these. So 14.3, 1035. That's good. We're good there. Executive summary. So here, I don't really care about any stat high level. I want we just have cleaning services revenue, which is equal to this number. Cost of goods sold. And this is going to actually be labor cost contribution margin. All right, and then G&A will just be this. We don't have any of this. EBITDA, debt service coverage. Well, let's make sure we don't have. Okay, so we do have some taxes here. We do have capex, debt service, startup costs, fine. Proceeds. Loan proceeds. Make sure this is all J, 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 J. Perfect, J. And then we don't need this because we included it above. Now, this minus our annual cash flow. We're out by quite a bit here, so we're missing some things. Looks like this bottom section is great. All right, so what are we missing? Oh, it's just the signs here. So let's just adjust this. So cash EBITDA, add that, this, minus, minus, plus, plus. There we go. There's our zero check. Debt service coverage. Now here, we don't need So revenue, expenses, EBITDA. Let's just redo it. So here's revenue, total expense, and EBITDA. Okay. We'll put this. I actually like this chart. Let's put the labels lower. Revenue, expenses. So if the expenses are higher than revenue, you got a loss. Otherwise, it's a operating profit and looking good. Let's increase the font here a little bit to 10. All right. Executive summary is looking good, all matched up. Also, this we should need a check on the total here, minus our annual detail should match. What are we out on this? 35,729, 779, 743. Ah, yes. So this. One of these is wrong. I'm trying to find it. Okay, so remaining equity to use would be period 0. It would be minus startup costs plus financing plus total equity contributed. And there we go. Because see that actually changed the waterfall. So there, now we match up. So that's balanced, that's balanced. Let's look at the balance sheet itself. We should be solving for 0 here. It's not. Oh, it is. Okay. Yep. November 2022. That's what we want to see, a zero balance check there. And then everything else looks good. We got our assets equal liability plus owner's equity. Let's set this end month to the last month of the year. 5. Are looking good. So all these things are all balanced on a timely basis, on a monthly and annual basis. Perfect. And that is that. Let's get into the sanity checks, and then this thing will be all set. I always forget to look if anybody said anything. No, they didn't. All right, so sanity checks here. We just want to make sure all the different summaries are all matched up. So annual net income versus monthly should be 0. And this is also to make sure, or make it easy to check if anything is off. You can just go to the global control and look at this area. So annual net versus monthly, that should be 0. Balance sheet summing up row 60 on balance sheet, monthly and annual. That's the right row. Annual check against monthly detail. That's that row. This we need to update. So that's taking the balance sheet cash flow amount minus the total here. And then the difference should be the equity required, which we go minus here. That balances. We have executive summary to annual detail, which we just did. That's 0. Oh, yeah, that's Excel's being weird today a little bit. Okay, distributions. This one it should be 0, and then cap table is N57 R59. This section, which looks good. 103 14.4. 103 14.4. Okay. So we're all set. Let's do some change some of the assumptions. We want to check first if we change the ending date. Okay, good. All 0 still. Let's change it to 1 year earlier. All 0s. Let's go partial into that year. Perfect. Okay, so that's fine. Let's also check include terminal value. No. No. good. Okay, you won't believe how many times, and like I had to structure the balance sheet so many times to make sure that there's never an error based on the end month and if terminal value is included or not. There's just, you wouldn't believe how much went into it. But now adding this slicer actually helped a ton, and now all these templates have a nice structure for that. That's stable. And when I say stable, I mean you could change any of these assumptions in yellow to any numbers based on whatever is relevant to you, and everything will flow through and balance on the balance sheet. Let's check one. I like to check this one to change the start month of this. Okay, so I changed start month. Something is off here. Let's look at the balance sheet's fine, so this must be something with the monthly. So the monthly is there. It's here. It's off on executive summary. We have it there though. It's added in here. Let me make sure. Ah, here I didn't drag this over all the way. So that's got it, and then the monthly is probably the same deal. Yep, same deal. So that's a good check there. So we caught it. Let's save that. Get these all to the top left. Visuals will update this as well. And that's why we put checks in for not just the financial statements. We also want to check the monthly detail and annual detail. Okay, so now that's 0, good. We can put this back over here. Still zeros. You could zero out the taxes if you don't want to show those, and then if you did that, you can see there's no taxes. Put that back to like 20 and 10. What? Oh, so this visual, we just did monthly cash position. Let's update this. Cumulative cash flow, operating activity. Okay. So in this case, we're actually only positive after the exit. And again, my numbers are just arbitrary, it doesn't matter. Just as long as the logic works. But it's saying based on the startup costs and operations, we're making like 23, a couple 100,000, a million here. And our startup costs and burn, what is it, 2.2 million. So it's taking most of the life of the project, the 5 years to make that back. Now, hold on a second. The monthly is positive in year 2023. Am I missing something here? Maybe. No, that's correct. Oh, yeah, that's positive, but we're still negative on the cash flow basis until the end year. Now, let's say CapEx was a little bit less. Let's say we're not buying a building. Now it's a bit different. Still negative cash flows though, but the operations are positive by year 3. But again, you can go in, you'll put in your revenue and cost assumptions accordingly, and the assumptions will be what they are based on that. Okay, so this is good. Visuals working. Kind of want to remove these. Yeah, that looks better. Don't need this bottom part. All right, so all I really will do, I'll do the overview video tomorrow. Also put in an index tab. Uh, so I've got, see this, so here's one, so on my site, like I said, I'm working on getting the cart updated so that whenever anybody buys something, they automatically are given access to the download. Before, I've been doing these manually sending them for the last 6 years. So I'm in the process of updating all the product pages, and I'm through, I started Saturday night or Sunday morning, I can't remember, and I'm through about, I'd say 80, 85 of them, but someone just purchased one that I hadn't done yet, and now they're saying, I didn't get my template, etc. And I'm like, yeah, I know, I'm sending it now. But that issue, that whole issue is what I'm trying to solve by doing this, which it will solve it. So now there's going to be a, you can view cart. Let me add something to the cart. So if I add something to the cart here, that I can then view the cart, remove things, etc., and then pay with debit card, credit card, or PayPal. So I'm working on getting, you know, most of these are upgraded with the cart, but some of them aren't yet. So I'm working on that. Hopefully by the end of the week that'll be done. I'm going to get the cleaning services model that I just did here yesterday and today updated. I'll do the overview video of this whole thing tomorrow, and then Thursday, Friday, and maybe tomorrow, if anyone has any great ideas, I'm willing to build like if they have a good one for a single page calculator they want to see built, like for some specific thing or some general thing that's used for all businesses that's very common that would be good to have automation around. I can build that. Um, don't forget to subscribe, like the video, and again, check out all these templates. There's stuff for all different things. And again, you can buy all the templates on the site. There's roughly 130 of them for $999. Uh, I've got everything packaged up nicely and organized when I'll send those off to you if you want to purchase. Uh, and that's all I got for you. I'll see you on the next one.